SoFi is getting absolutely monkey hammered this morning. The brilliance of their CEO, who people want to come out on the internet and says, it's only going to go to $75 a share so the CEO can get all these bonuses, just issued like $1.5 billion worth of stock. It has collapsed the price over 7% overnight. And yes, all stocks are bad, even SoFi. Okay. There is nothing you can do in a situation like that, right? When the price is near all-time highs, of course they're looking to sell stock because they get those proceeds that they can then use to fund the business. Okay. Does that mean it's going to collapse and go to zero at this point? Highly unlikely. But even with the best laid plan out there, you can still get monkey hammered. And that is why position sizing is so important. Okay. You don't have to put all your eggs in one basket and then watch that basket get absolutely monkey hammered. That's why you want to diversify. That's why you want to make sure that you're taking positions small enough. So if something like this happens, you're going to survive and you can move on to the next stock. So for those of you SoFi bros out there, I'm sorry to tell you, all stocks are bad, including SoFi. Only every once in a while do they act right. And unfortunately, the management team at SoFi saw it was acting right, saw it was near all-time highs, and saw, hey, you know what? We could use those funds to fund the business. So we're going to release the shares right now. And unfortunately, that's what happened. So today is Ask Me Anything Friday. And so we have a huge bank of questions and I'm going to try and get through as many as possible to help you out in the best way possible. So if that sounds good to you, I want you to understand I'm trying to give as much value as possible with absolutely nothing in return whatsoever. So subscribe. That's the best way you can pay me back. Had Enough 2 says, would you take a stock that is on your list, but they're having a down day today? Now he's off to work. Okay, absolutely. Why not? Right? It doesn't matter if, and we can use SoFi right here, right? How many times did SoFi have red candles all the way up in this big, beautiful uptrend? A lot of times. A lot of times I had red candles, right? But when you're in the midst of a big uptrend, you're 10 over the 20, price over the 50, you can honestly get in at any point in time and let it run as far as it can. Is it the most optimal time? Of course not. That would be right here where the 10 first goes over the 10 over 20, price over 50. But you can see a huge move like this can run for months, literally months, before it really starts to contract. So absolutely, I would say don't stress so much about any single day and what the price is doing. Just follow your plan, follow your trend, and you can run that dude as far as you can. Luke has a question. What's the difference between plan A and plan M? Well, what's great about this, Luke, is you can go into the FAQ and member contributions. You can go to Outlier Trading Plans, AM, ETF, and Sit in Cash, and you can click this link right here. This link is going to get you my exact PowerPoint. Now, in my exact PowerPoint, there is no, trust me, bro, the stock only goes up. No. We treat this like fund managers. We understand that there are winning trades, there are losing trades, and we can build an expectancy around this. Okay, this is different than any other guy that you can find on YouTube because we actually treat trading like a business rather than $75 in this one stock will make you a millionaire. Shut up. This is the reality of life. Okay, if you want to be successful, you need a plan with an edge. Okay, this is what it's like to have a plan with the edge. Now, to his question, what's the difference between plans A and plans M? Honestly, it's so simple. It is just going into Outlier and clicking the difference between, let me go to stock plate. There we go. From swing signal to active signal. Now, one big difference here between plan M and plan A is the expectancy. Tying that in a nice little bow right here. Plans A expectancy is 1.2, I think. Plan A's expectancy is 1.2 with a 46% win rate. Now, the only thing we change is from swing signals to active signals, or vice versa, from active signals to swing signals. And we double our expectancy to 2.25 with the 57% win rate. So to me, I'm only going to be trading plan M. However, that's what these are for, is for you to come up with your own plans, Luke, and everybody else who's watching. That is what we have this for. Patrick asked the question, there's a long call that has wide spread, so a wide bid-ask spread. And when they tighten up a bit, I bought it. All right, that sounds good. That's what I would do too. If it's really wide, I would wait for it to tighten up less than 50 cents. Now, of course, right, as a professional fund manager, I have rules, and my rules for options liquidity are less than 50-cent bid-ask spread. I don't make this up on my own. Everything on here is back-tested, proven with data. So to his question, now when I go to roll the spread, it's large again. Should I just hold on to the current delta until the sell signal comes? Okay, cool. I love this question. I love this question so much. So, oh, by the way, this is what Plan M has done to the account. Amazing. Not mad about that at all, are we? So let's say, for example, that we wanted to roll. I'm just going to pick one at random. Okay. I'm going to pick CVE at random and we go to roll. Now we can go to the CVE options grid. Oh, we already got it right there. Cool. Looking at this from the 17 to the 18, if I were to roll from the 17 to the 18, right? This may be, and it's not that wide, but imagine that it's super wide. I'm not too concerned about how wide it is right here. What I'm looking at is my extrinsic value here. That's what I'm caring about. I do want to make sure that this is less than 50 cents. Okay, I should say that. I do want to make sure that this is less than 50 cents, but also I'm trying to make sure that my extrinsic value continues to be at a level that I feel acceptable. I like 20% or less, but my 30% absolute max is the limit right there. So let me rephrase that. If the new strike is still really wide, I wouldn't be looking to roll because it would violate my liquidity terms here. But then again, as you've already seen, it can tighten up at any point during the day. And if it tightens up, then by all means, you can make it happen. You can make it happen. Great question, my friend. Steve, what's up? Could you run through entering a trade in the portfolio manager, including the roll element too? Would be super helpful. We'll have to do that in January when we're doing the US Investing Championship, because what's going to be great about that is as we're doing this, right? All of these are paper trades, right? There's full transparency here. All of these are paper trades. However, we have funded the OVTLYR account, the OVTLYR fund, with $50,000. You will see step by step by step every single trade, every single entry, every single exit as we go through and hopefully dominate the US Investing Championship as a team of outliers. I can't wait to see how many of you beat me. During that point, Steve, I'm going to go through the spreadsheet manager and everything like that. But honestly, it's not that difficult. You just put in what you bought it for and the amount purchased for a column. You go to the next column and you do equals. How much did you get the credit for? Let's say it was 75 cents. And then how much is the new option worth? Let's say it's worth $1. So now the total in that amount received column, right? Amount paid versus amount received is the 75 cents plus the dollar, whatever I said. Got a sale. So this looks like a mid-December exit in SGov might be a good idea. Just want to get your thoughts on the annual dip. Okay, this is news to me. Let's go to SGov. Now, I'll be 100% honest with you. I didn't even know about SGov until May. If I had known about SGov before that, Chris would have had an extra zero in his account, because this is my vehicle for putting money into when I'm not invested in the market. And I can be out of the market for months at a time. In fact, I was out of the market for months, and then Plan M set up this week, and it's been gangbusters. So taking a look at this. Friday, December 1st, up to December 13th. And then it reset here at December 14th, and then ran all the way until the end of January. I have no idea. I didn't even know that occurred in December. If anybody knows the answer, in fact, it did it again in 2022. Oh, hang on. This was 2023. It did it. What about 2024? Did it do it? 2024 did it. Yeah, dude, got a sale. You're right on it. I don't know why this is happening. I'm not in SGov right now, so I really don't, I'm not paying attention. But that's a really good point. I have no idea. I would love to learn more as well. How can I get my Trader string like Chris's? Okay. This is easier than you think. Okay, go over here, and I have to get off just a second, or I'll show you like literally my entire everything. Okay, so we go to options grid. Okay, so all you gotta do is on the right hand side, go to settings. After you click settings, it's gonna pull up all of these little icons down here. I have saved mine as Yule, super like super unique name right there. And then these are the columns that are available. These are the columns that I've chosen to use. If you want to get from A to B, you just click it and click the right arrow. And now Vega is here. And now, let's see. If I hit exit, I assume that it saved it. Let's go see. Maybe it didn't save it. It's probably a save button somewhere that I missed. Hold tight. Okay, option grid. Oh yeah, there's a save button. I totally didn't see right there. Okay, so there's the Vega. Click it over. Okay, there's the save layout button. Click it. And now there's Vega. Pretty cool, yeah? Pretty cool, yeah? I'm going to take that off later. But there you go, Vincent. Too easy, my friend. How can I get my trader screen? We just answered that. Albertone. I think this is Albertone. Changed his stuff again. I posted in the general Discord a table from a data set exported by Scott. Hey, it's Scott. Larger than Plan M, but based on the same principles that show that utilities and energy had low expectancy. Awesome. Thank you for doing that, my friend. Yeah. Follow your plans, whatever that is. It's not okay. The expectancy, I know you're talking about. Some sectors are going to have higher expectancies than others. It's just the thing. Financials is one of those sectors that has like super high expectancy. Utilities and energy are going to have lower expectancy. And one like healthcare, screw that guy. I'm never trading that. Who came up with 10 over 20 price over 50? So first off, it totally works, doesn't it? It's just math and it always works. So my friend Steve Burns, if you don't know Steve, you should. Steve Burns was the author of this book, New Trader, Rich Trader, and actually the author of many, many books. In fact, a lot of you probably don't even know who Steve is. Hang on. Steve Burns Twitter. If you want to learn who Steve is, go to his Twitter. He's super active on Twitter, and he's got a huge following as well. There we go. So 690,000 followers. Steve is a great friend of mine, a great mentor. You can find all kinds of videos on my YouTube channel of me and Steve having different conversations. But he is the one who I learned the 10 over 20 price over 50. And it works always because it's just math. It's your short term, your intermediate term, and your long term all working together. However, check this out. Even though it always works, that doesn't mean that the outcome will be the same. I love looking at this Tesla example because 3 different times your 10 went over the 20 and price went over the 50. Okay. 3 different entries were exactly the same with 3 completely different outcomes, 3 totally different exits. So this is what I'm trying to tell you guys. Don't have any expectancy. Okay. Not expectancy, but don't have any expectations on any one individual trade. Because while the 10 over 20 price over 50 always works, it always shows you where the direction of the trend is going. And I can take that to the grave and I don't have to put any sort of disclaimer on YouTube because it is a fact. It is a mathematical price time based fact. When the 10 is over the 20, prices over the 50, that means prices are trending up. When the 10 is under the 20, prices are under the 50, that means prices are going down. It is a fact, unarguable. But the outcome of these trends can be very different. This one right here, maybe a break even or a small loss. Here, a small win, and this one, a giant win. So that's my answer. It's a great question. Mikey Mike the market cycle. Oh, or Mikey Mike the market maker. We already answered that. It's like 20 or 30 or 40. I don't know. Chiopulus, number 4. I'm still not clear on the market breadth with VLAB screener for signal entry. Yesterday, we could only do one sector. Can you explain that again? Okay. So the VLAB screener is so handy. And actually, the update that's coming this weekend, probably, I'm going to say probably, if it's not this weekend, it's next weekend. There's a huge update coming. Mahesh has broken it up into 2 updates instead of just 1. We cover 2,600 stocks right now. We're adding another 3,000 over the weekend. And then by next week, we're going to add another 3,000. So our total is going to be over 8,000. Basically, any stock you want to look at is going to be here in Outlier. The top half of VLAB's bookmarklet, this section, is going to be available on the bookmark or market breadth tab. It's going to say something like summary view. And what we're looking for here, I'm still not clear on the market breadth on the VLAB screener. So all this is doing is it's going through each one of the sectors and trying to help you out. And it's just so cool. So for example, it's going to show you the heat map value, the fear and greed heat map value for each sector. So for example, this is the financials. When we look at SoFi, the financial heat map value, 50.08, should be the same as this, 50.08. And the heat map value is moving up. So easy to see that the sector is getting more greedy. Okay. Now it's looking at relative greed. Relative greed is measuring the fear and greed of the market versus the fear and greed of the sector. Now in healthcare and energy, you can see both of these are yes, but no other sector is. Because of that, I would only be interested in trading those 2 sectors because that means it's the greediest sectors possible. This is the greediest group in the entirety of the market. I want to be there. It's more greedy than the whole market itself. So therefore, I'm very interested in that. Next, the breadth. The breadth is actually a lot more simple than you would expect. It's just measuring this green line right here. This green line right here shows you how many buy signals versus sell signals there are. So today it's within like 10. literally within 10. That's why it's right at 50%. It's 49.72. And then the red line right there is the 10 EMA. By the way, I created this indicator. I'm very proud of it. This breadth indicator right here. So going back to this, it shows you which ones are crossed over bullish on the 10 EMA or bearish on the 10 EMA. Now, the DCs, the donkey channels, that's our nickname for it. But what this is measuring is the outlier channels down here. So looking at this is measuring how many uptrends versus downtrends. When it's green, that means more uptrends. When it's red, that means less downtrends. That's what we want to see. If it's any shade of gray, not interested. Whatever of the 50 shades of gray that you see on here, we're not interested. We're just trying to see when there's more uptrends and less downtrends. And in our trading plan, that has a huge impact here. So if the market is a score of 2, meaning more uptrends, less downtrends, it doesn't matter what the sectors are. All sectors are in play at that point. But if the market only has one of those, less downtrends or more uptrends, then any sector is available if it has at least a score of 1 itself. So you can see we've done the work for you over here, right? If it's got a bullish cross or a bearish cross, what the value is, how many outlier channels are in place here. And so this is basically just taking the data that's already available and making it so much easier to see in one place. And so this is the market score of 2 on everything today. So this block right here is going to be available really, really soon. He also has it VLAB, this bookmark that goes a step further and pulls in the trading, the stocks that actually fit into plans A and plan M, which is amazing. And I totally use that. It is a huge, huge, huge time saver. So I hope that was useful. I hope we got it there. I don't have a lot of time left, so I gotta speed run these. How does a price go up even with low volume? Okay, so in fact, on low volume, price can move a lot more. So for example, Bugsters, when you're looking, imagine that you walked into a mall, okay, and you're like, hey, I want to buy a Santa hat. How many stores are selling Santa hats in the mall? Okay, so if every store in the mall is selling Santa hats, that means the liquidity is super high. So I can walk into any of them, and more than likely, their price is going to be pretty close to what the market price is, maybe a couple cents more or less, right? But if there's only 2 stores in the mall, that means the liquidity is collapsing. Okay, so low volume here. And then they can now put themselves in a bidding war with each other to see, you know, who can get the best price. And you as the consumer can go find one with the best price or not. But imagine if there's just one, right? They can set their price to whatever. So price has to move a lot more to get filled. Because if I want to go buy my Santa hat and there's a lot of volume, I don't have to pay so much to get it. If there's a little bit of volume and they are pricing it super high, then I have to move my price super high to get filled to get that Santa hat. Does that make sense? I hope that's useful. Do dividends impact the trades that you take? No, and this is one of the few times that dividends are actually built into the price of a stock, price of an option. Now, I can't think of any stocks with dividends off the top of my head. Let's go to Coke. I think Coke pays dividends. This is super handy. If you go into any stock that pays dividends and you go super deep, where is extrinsic? Super deep in the money and out of the money on the puts, you can get an idea of roughly what that dividend is going to be. The extrinsic value on puts is going to show you it's going to be somewhere between 4 cents and 14 cents is what I'm guessing. And over here, it usually mirrors that as well. I don't know why it's not right now. You could even go further out in time and see, yeah, it's going to be roughly 14 cents. It's going to be roughly 14 cents what that dividend is. That is already built into the price of the options because the market makers understand that people could arbitrage this by whatever means they want to, right? I'm not going to try and come up with whatever sophisticated plan there is. But because of that, they already build that into the price of the option. So I don't even pay attention, very honestly. But it's a great question because I'm sure some people could. On a 1020 cross, what time frame do you use to decide the end the trade? Okay, so I only trade the dailies. So I'm only looking for a 1020 cross on the dailies because that is the exit rule that I'm using on plan M. And all of everything is on the dailies, with the exception of my emergency exits, which we hit yesterday on day trading order block. That goes to the 5-minute chart. Everything else, and that even had the 1020 cross on the 5-minute chart. Everything else is on the dailies. So that 1020 cross right there. There you go. Great question. Okay. I only have just a couple of minutes left. Where did I get that sweater? I don't know. My wife bought it and she's like, hey, look at all these fun new sweaters I bought you. And I was like, thank you. I appreciate it. She knows me. Why don't we usually trade in the material sector? We totally could, dude. There's nothing stopping us. There's no reason except for healthcare. There's no sector that's excluded for me for any reason. I mean, the breadth is super high on this, but the heat map value, the fear and greed is less than the market. It's close, but it's less than the market. And listen, if this pops up in a couple days, I'll be right up in that material sector. I'll be all up in that material sector. There's no reason not to. Just follow your plan, come up with that. Let's see. Okay, Cam, do you use the deep thought indicator alert condition, or is that any plan exit trigger, or just like the plan M alerts with deep thought? Okay, I wanted to answer this question as best that I possibly could. So we have a genius on staff named Deep Thought. He's not a man. He's more of a supercomputer. So we have these indicators 100% for free inside of our Discord. You just go to the FAQ and member section, FAQ and member contributions, go down to Trading View, and you'll see the indicators that we use on a daily basis. Now, the official 4.2 indicator is so sick because it has exactly the order blocks, exactly the moving averages, exactly everything that you'd want to see. And he's even built some really sick codes in here where it'll light up when you get an exit signal onto whatever your plan is. You can mark up your charts. It's so sick. But do you use the indicator on here? I'm not using that because I know what I'm looking for. Could somebody else? By all means, you totally could if that works for you. I just want to make sure. I am personally I am definitely a control freak when it comes to my trades. I want to see it for myself, kind of thing. I don't want ever to be taken out of a trade by a stop loss order put in the market. That happened to me so many times. In fact, somebody in the Discord mentioned yesterday, how do I control that? I don't put an exit in the market, period, because I want to be in control of it. Just like I was in control of the entries, I'm in control of the exits. But then again, for some people, that could work great. Rockhill says, how important is it to establish ATRs based on the price of the stock at the moment the option was purchased? Why not go off the price of the stock one day over? Okay, so here's the deal. In fact, let's go to the trades that I'm in right now. So we can go to Zion. Okay, so let's look at Zion and let's pull up the ATRs. So down here at the bottom, I'm gonna have to drop y'all off. Down here at the bottom, you can add an ATR indicator. You just go to your indicators, you go to technicals, you go to average true range. This is the one you're looking for, not anything else. This is the indicator you're looking for. So this will tell you what the average volatility of a stock is. Up or down, sideways, it doesn't matter. It's trying to show you how much volatility is associated with the stock. From day to day, it's not moving much, my friend. So when I got in, it was at $1.50. Today, it's at $1.43. Okay, has it come down? Yeah, but has it come down meaningfully? No. So I set all of these levels at entry, and then I leave them. I don't touch them again. Could you go through on a daily basis and tweak and do all that? Absolutely, you could. I choose not to do that because I don't think that it's going to make a meaningful difference in the trade. Could I be wrong? Absolutely. But for me personally, I just don't mess with it. I put it on, and that's where it's going to be, and that's okay. Sheet. Man, I'm gonna mess this up so hard, and I don't mean this in an ugly way. Okay. She tall the cur. I could be completely wrong. Shitaliker. I want to join you in the US Investing Championship. And I also, if you could have the Outlier University fast track so we could complete this before the competition starts. Bro, we have to take it one step at a time in Outlier University, right? Let's talk about fast track for a moment. How often would you want your brain surgeon to be fast tracked? Probably not very often. But a lot of people get into trading and they want the fast track. And I'm not looking at you in any sort of critical way. The first year of trading, you can expect to lose money. It's just the truth. The first year of trading, if you can avoid blowing up your account, you have actually beaten 90% of traders. Like at that point, you're now in the top 10% of traders. In year 2, if you can get to break even by year 2, you are in the top 95% traders. By year 3, if you can just eke out any sort of profitable gain for year 3, you're in the top 97% of traders. By year 4, if you're actually making money in the markets, by then is when it's really going to start to flow. You're in the top 1% of traders. And at no point in time is that being fast tracked. So with OVTLYR University, we've already covered the Bravo or the alpha class. The whole alpha class is available online for free forever. We don't charge a single penny for it. On YouTube, there's a playlist. Just start at the top, work your way all the way down. Bravo class is going on right now. We had to modify Bravo class. I did so much work yesterday as far as putting on new trades, rolling trades, and closing trades. I didn't have a time to get through a real lesson and do the justice that they deserve, right? These people are paying huge bucks to be in OVTLYR University. Actually, they're not paying anything. It's completely free. We make it free because we want you to be successful with no barriers to entry. When you are successful and you understand how to be successful in the markets, then we want you to become an outlier. And it's 82 cents a day. That is our whole evil plan, is to make you successful. And then you become an outlier. Okay? It's not pay me $12,000 a quarter. Maybe you'll be successful. It's go be successful for absolutely no cost. After you've found how successful you can be in the market, use OVTLYR. It's going to make your life way easier. That's our evil plan. Now, listen, I do have to run. And if you're looking to save time, make money, and start winning with less risks, click one of these 2 videos, and we will talk soon.